Chinese presence here at the wholesale one, Carmichael Road. You know those stores?
Well, I'm
They're
not sure.
Bahamian Chinese, eh?
They may be, I don't know. I mean, that may be an
They are.
immigration question.
Curious.
But, well, in any society, you're gonna have people of different ethnic backgrounds, and you're gonna have a blending. They probably have some status here. Either they have Bahamian citizenship or they have residence. I would think that would be essential if they're going to promote and participate in a retail operation that is so public. I don't think that it would be illegally. But that in itself would not be termed as a foreign investment because they are resident here within the country. They have taken up homes here. And Chinese, Chinese are simply fairly good business persons, you know, and that's why we tend to be aware of their businesses and their success. And actually, that would for a business class, that would make a very good project to study the practices of a Chinese run operation than a Bahamian or local. And a lot of it is cultural. I mean, I don't want to digress too much, but a lot is cultural. I recall when I worked for an international bank, traveling in the Caribbean with a lady from Jamaica who was Chinese. And she made the comment that she is so particular in her work because that's how she was brought up in her family, helping with the family business. That she participated in the family business, which brought a certain level of training to her. And for them, everyone had to. There wasn't a choice as a member of a Chinese family to participate in your family's business. And that's what we generally see. There's a couple other traits to them as well, but generally the family is always involved in business. That doesn't hold true necessarily for Bahamians. You know, sometimes Bahamians have gotten to the point where they remove themselves from family businesses. They don't feel the need to participate.
I have a question, sorry. On a point you made, I guess it's more of a macroeconomic question. You said Bahamas has access to hard currency, access to more hard currency in comparison to other Caribbean countries is advantageous. How exactly is that advantage for Bahamas?
Well, the Bahamas is a net importer. So in order to be able to import goods, particularly, the Bahamas has to have access to foreign currency to pay for those. And that's why the Bahamas has always been looked upon as being fruitful, because it has the access to hard currency, and therefore businesses within the local economy can very easily make its imports. And it becomes obvious when you travel through the Caribbean. You walk into a grocery store, and some of the grocery stores in the Caribbean, the shelves are very poorly stocked because they can't get access to foreign currency. I've been involved in a business or in a company where sometimes being able to receive payment from another Caribbean country has been difficult. And they tell me, well, I'm waiting for the central bank to approve foreign currency exchange. So that's one of the advantages that the Bahamas has. The Bahamas has a lot of foreign direct investment. Right? Didn't pull the numbers on it, but it has a lot of foreign direct investments. But also, it has the inflow of hard currency through its tourism sector.
You think if we had less, it would have forced us to be more industrious in terms of having to produce our own? Because another thing, if you go in those Caribbean countries, they produce a lot of their own stuff also. And maybe that's a result of them being unable to.
And that may be true. There may be some truth to that. Whenever I travel in the Caribbean, one of the things I do like to do is go into the food stores. And I go into the food store and I look at things on the shelf, just to see what's different here than in Nassau or in the Bahamas. And when I take the items off the shelf, I look to see where's it made, where's it produced. And it is amazing, a lot of things, you know, produced in Barbados, produced in Trinidad, produced in Jamaica. And here, we go into the food stores and everything is, for the most part, but the steaks or, you know, but it depends on what it is. I mean, a lot of the food stuff are through the States as opposed to China. But we're not very productive when it comes to manufacturing. And to some extent, it's to our detriment. But it provides us with a certain degree of comfort. When we travel abroad, the same things that we're seeing abroad, we're seeing locally. Now that's different for other Caribbean countries. And through working with a bank that has become a regional bank, I had colleagues who come up from the Caribbean, and I would say, okay, let's go to lunch. Where do you want to go? Let's go to a place like Luciano's. No, let's go to Wendy's. We don't have a Wendy's franchise in our country, so let's sit down and but it's something that they would see on the television if they see a U.S. program, but it's not something that they can readily experience. But us, you know, we are very much Americanized or North Americanized, that we consider ourselves very similar to North America. And we're not productive in the manufacturing sector. So, other things that are reserved for Bahamian nationals are, interestingly, real estate and domestic property management agencies. And there too, questions have come up as to with respect to sales transactions in real estate, which are conducted outside of the country. Domestic newspapers and magazine publications, domestic advertising and public relations firms. And I think you realize that it's becoming harder and harder to ring fence economic activity as the world becomes more globalized. Because even for advertising and public relations, there are firms outside of the Bahamas that designs them, develops them, and we simply run them. We run them in the local publications, in the local papers, on the local televisions and communication channels. But the design and development of them is outside the country. Security services are reserved. Domestic distribution of building supplies. Construction companies, except for special structures for which international expertise is required. That would be a hotel.
China construction.
It requires the expertise from China. Or in the past, we had Filipino labor, which brought a certain level of expertise, I presume. Personal cosmetic or beauty establishments, shallow water scale fish, auto and appliance service operations, public transportation inclusive of locally solicited charter boat tours and landscaping.
We let the Dominicans participate too much in the scale fish investigation.
They black or they maybe do it?
I think that's an enforcement issue.
Shallow
Well,
water
it
scale.
is an enforcement issue, but sometimes when you delve into it, you realize that Bahamians compound the issue. You have, in the case of DR, you have Bahamians utilizing the services of the DR. Someone from the DR. And I mean, I've seen in the local press where someone from the Dominican Republic may have been given a work permit to be an engineer on the boat. they also fish. Yes, when they're not busy tending to engineering functions on the boat, they're simply out there diving, fishing. But that's a problem that we as behaviors need to address, because it applies to so many other areas dealing with immigration as well.
While you're on shallow water, so you're saying this is a reserve for the Indians, shallow water, whatever that means, because, you know, depending on who you ask, shallow could be 50 feet. I mean,
Yeah, I think the distinction there is between deep sea fishing.
right, so the non-Bahamians can then get the marlins and stuff that are not protected, I presume.
Well, I guess I'd look at it the other way. That they would not be restricted from participating in that if they want to make a proposal to the government to do so. And I'm thinking of these, what they call it, long line fishing. And it's a matter too of resources as well. Remember now, the shallow water fishing, you know,
Anybody can
person
get
go on a little sloop and do that. But when it comes to investing in the kinds of crafts that are needed to do the deep water fishing, long line fishing, it requires a certain level of investment. And the whole idea is to bring foreign investors to invest capital. There's no point in them coming here. They're going to stand up on the side of the road selling peanuts and newspapers. You don't need them to do that. That's my take. So the government has, as one of its goals, encouraging and facilitating business activity in the Bahamas. And the Prime Minister is credited with the statement that my government is committed to an aggressive plan to transform the Bahamian economy and society for the benefit of all Bahamians. But a vital component of that plan includes promoting additional foreign direct investment across the country, particularly in Grand Bahama and Farming Islands. So that's a major component of the Bahamas government to include foreign direct investment, or to attract foreign direct investment. And it's not just this government, it's all governments have done that. All administrations have done that. So, what is foreign direct investment and taxation? What does it mean for taxation in the Bahamas? Well, the Bahamas is no different from most countries within, particularly the Caribbean. The Bahamas uses extensively tax incentives to attract foreign direct investment. Most lay people are aware of that. There are tax incentives granted in order to attract the foreign investors. And these incentives have now been enshrined in various pieces of the legislation. So, accordingly, a whole list of legislations have been prepared over the years to provide incentives and concessions for doing business in the Bahamas. And this is not only in the tourism or the hotel sector, but equally in respect of manufacturing and agricultural developments, as well as establishing timeshare facilities. Some of the acts which provide these incentives are the Hotel Encouragement Act, the Export Manufacturing Industries Encouragement Act, the Industries Encouragement Act, the Agricultural Manufacturing Act, Spirits and Beer Manufacturing Act, Bahamas Vacation Plan and Time Sharing Act, Free Trade Zones Act, and yes, the Hawksbill Creek Agreement Act. All of those provide tax incentives to the foreign investor. Now, it'll be interesting to know as well that some of the incentives that's provided also include the availability of access to land owned by the government. So in some cases, there is crown land which a foreign investor can have access to. In order to facilitate his business here in the Bahamas. So by and large, we have access to government-owned land, concessions on duties, customs duties, or border taxes, particularly for raw materials, equipment, and building supplies. Exemptions to real property taxes for certain periods of time. And also, it's important to know that the Bahamas has no restrictions on current account transactions or any restrictions on repatriation of profits.
Wow.
You know, that ever changed? Our last one hurts a lot.
Probably not. Probably not. Because I think that the Bahamas sees it as a very important aspect of attracting foreign investors. If you start restricting their ability to repatriate profits, then they're going to be less likely and less enthused about investing. Yes, they can tax it a little bit.
Legs and tax.
And to some extent, there is a small degree of taxation now, only in terms of stamp duties, stamp taxes, which applies to obtaining foreign exchange. I think that with respect to the banks, they have enforced that for the banks. But if you were here last week, you would have heard me saying, yes, I believe that there should be something like a corporate income taxation, which would apply equally to domestic businesses as well as international businesses. And a flat rate of taxation would simply allow the Bahamas to generate some revenue from it. But bear in mind that what we're talking about now is concessions. Concessions to the foreign investors to attract them, to make them feel comfortable investing in the Bahamas and being able to take home their rewards.
So do you think that's why a lot of them are so involved in social events, like donating, pumping a lot into the social events, so as to make it, make a presence, even though we're not paying the tax, we're still contributing to all these charities and social events, because within the last few years, a lot of the banks have upped their donations. And a lot of charities, things that they've been from yeah, they could do more, but I'm just saying.
I do agree. I think that for many of the offshore companies, being a good corporate citizen meant or means donating.
Right.
And a lot of them tend to evaluate themselves on that basis.
It's requirement, some of them.
How much?
They contribute to the community.
And
How much have I donated? In fact, some of the companies even set a budget.
Sure.
They may set a budget and say, well, 1% of my income, my net income, goes they do that, and they see it as very important. And then on the other hand, the Bahamians see it as very important. The Bahamians and the companies feel that, okay, well, let's get a contribution from this foreigner by ensuring that donations are made to the Red Cross, to this one and to the next. So, if I was a foreign investor, then I would be inclined to say, gee, well, that's my taxes. Those are the taxes that I am paying to be in this jurisdiction, which says it has no taxes. So as I said, most of the incentives, of the investment incentives provided are exemptions from customs duties on the importation of particularly building materials, equipment, fittings, furnishing, and selected raw materials. In some cases, however, foreign investors are also exempted from business license fees, as well as real property taxes for a limited period of time. Now, this real property taxes, from looking at the legislation, is almost always it's almost always that they're getting exemptions from that. So,
Well, do you think it's a good idea to, I'm thinking in the case of Bahama, in terms of property itself, either offering a foreign investor property at a significantly undervalued rate? I mean, because I'm totally against any transference of property to non-Bahamians. That's just me. You know, I'd give you a lease, but I'm really reluctant to sell it. So what do you think? That's a good FDI incentive? Because they're already getting a break on the hotel repatriation fees. They're getting a break on the materials to build a hotel. So why do we have to concede with the land itself?
and I think that's a very good opinion with regards to whether land should be transacted or ownership should be transferred to a foreign investor. Whether it is Bahama or any other major company. Personally, I would agree with your view. The literature says that in some cases, the foreign investor will have access to land owned by the government. It does not specifically say that land will be given to you. And, you know, we can argue as to what do we mean by given. But if it's being transferred at a significantly less than market price, you can almost say it's being given. So, the problem with transferring land is that there's a limited supply of the land. In an already small geographical country. When it comes to the geography of this country, the availability of land is very limited. Once you've transferred it, you cannot get it back. So, yes, it might be worthwhile to consider, instead of selling or transferring ownership, lease. If a foreign investor is investing into the country, generally they tend to put a time period around their investment. I expect that I will invest for 20 years, or 50 years. This is the return that I will get. I will get my capital, return on my capital, and it will be returned to me over a period of 10 years, 20 years, 30 years. And you can very easily say that for that purpose, I therefore want access to this property, to this land, under a lease for a minimum of 50 years. At the end of that 50 years, the government has the option of renegotiating it, or has the option of saying to the foreign investor, you came in, you brought your capital, you brought your expertise, you got your return, you got your profit, and essentially your investment has been returned to you, we need to renegotiate this deal. We need to immunize it, or we need to continue what we have done. And that's a very interesting conversation for the government to have, because I believe it's that kind of conversation that the government is now having under one of these incentive acts, the Oxford Agreement. But I think that the government has to look at tax incentives as having a lifespan and not for it to be indefinite.
Yes.
We could say, I just want to make a comment on the FDI in the last 10 years. I mean, those of us that have young children won't even know the land the way we know it. Because Albany and those have that side. I mean, our makeup of our country has changed because of the FDI. I mean, we appreciate what they've come and done, but they've changed the landscape of our country.
Is it better or worse?
That's very true.
I don't know.
Yeah, that's a good point.
Is it better or worse?
The
don't know.
wetlands are no more.
I think they do a fairly good job preserving
Yeah.
especially
I
now.
don't know. I don't know.
Just make sure that they reserve.
I don't know. I mean, you can't even go out where.
But you see, all of it is subject to argue and debate, because there are
You can't get by-
persons and entities who will say that, is it called the Bass Commission?
Yeah.
That
I know
there
it's
is
called the
destruction of
Basque
wetlands taking place, particularly in some of the family islands. And the only thing that comes to my mind is I recall all the newspaper articles about dredging in
Bimini, Abaco, Baker's Bay, Maguana.
So,
I can call the names.
you know, it's questionable as to whether the natural resources of the country is being preserved. And there are a lot of natural resources to the Bahamas because of all the islands that we have. And then there's that balancing act. How much must nature give way in order for there to be development? So you have to balance it. You know, you have other countries where forests are being taken down in order for development to proceed. You got to decide. Someone has to make the decision. And I don't know who's the best equipped persons in the country to make that decision, or whether that's something that should be put in the hands of a completely independent commission. And the question comes as to what do we mean by independent, and is there such a thing as independent? But those are legitimate concerns that you would have. Now, as I mentioned, the government is continually engaged in the process of reforming legislation and the regulatory environment in order to facilitate foreign direct investment. Many of the business promoters in the Bahamas, or intermediaries in business development in the Bahamas, are also on board with the government in promoting the Bahamas to attract FDIs. And I noted that several law firms actually do this. I spent some time on the board of the Bahamas Financial Services Board, and there were many times when they were having activities and promotion activities, and the law firms would be very much involved in traveling and promoting the Bahamas for foreign direct investments. Certainly, the Bahamas Investment Authority does that, but I just pulled in something I got off of the website regarding Halsbury Law Chambers, where they're promoting the Bahamas with respect to foreign direct investment. And they say it's a chain of islands nearly 500 miles in length, off the tip of Florida and running nearby to Cuba. the Bahamas ranks among the world's finest destinations for investment. Year-round warmth in a business-friendly culture. Tax-neutral environment with no capital gains, no sales or income or estate or personal property taxes, and only minimal real property tax with no penalty for foreign ownership. Revenue is derived from import duties and fees for the country. Guaranteed repatriation of funds should investors ever decide to sell.
Well,
What's right?
Repatriation of funds should investors ever decide to sell.
So there you have it.
So, and then it goes on to talk about the Bahamas. The question is whether it's against the law. It's not against the law. So a lot of people are on board, and then there's also another law firm that I just found, and that is the Calendars & Co. Openly encouraged and welcomed by public and private entities alike, foreign direct investment represents a key cornerstone for the continued growth of the Bahamian private sector. The country's tax-neutral environment, that is no capital gains or sales or income taxes, and political stability provide an ideal environment for investors seeking opportunities in a business-friendly jurisdiction. Other policies designed to encourage foreign direct investment include access to government-owned land, concessions on customs duties, and exemptions from real property taxes for defined periods. And then they go on a little bit about the firm. So, a lot of people are on board with respect to investing in the Bahamas because it is important to the Bahamas. So, what do some of these pieces of legislation allow the foreign investors to do?
It's kind of depressing.
Just don't jump on the rail.
Oh, what we
Well, it's not intended to be depressing, but intended to elaborate on what is foreign direct investment in the country.
I think it is,
And at the end of the day, everyone makes an assessment as to, do we benefit from it? Or is it really just a cost to us?
they definitely benefit more.
Yeah,
We become
that-
dependent on them,
Right.
and we discourage ourselves from being industrious.
And we're
For
grateful
jobs.
for a few good paying jobs.
Right.
So the
Until they decide to get a little rough and they go.
Yeah, they pack up.
Complete dependency for peanuts.
And they wonder why we like foreign and don't appreciate our own
So then the flip side to that is, well, if you didn't have the foreign direct investment, how different would things be?
I think there should be foreign direct
And
investment. I think there should be more of a
let's
partnership.
start first of all with the tourism sector.
Well, you know,
Would we have the Atlantis?
no.
Would we have the soon to open Bahama? Soon to open.
That would be very
With these terms, there's always different definitions as to what soon means. Would we have the breezes, the sandals, etc.? So, there is a trade-off. There's a trade-off.
We spend 10 minutes on just concessions. I think we could be a little more stiff, we could be, there should be more partnership, I feel. Like initially, if the investment goes well for this one time, then boom, kick in something else to benefit. By this time, the precedent has been set in the past, where we just, let them come and do whatever they have to do. But I think that,
Whatever that comment was that you made earlier.
I thought I was very quiet, I'm sorry, I thought I was
You know
talking to
what?
him. But I mean,
Those things are good when we're young, but when we hit
Things
middle age
change.
and these people start kicking us out of their different firms and
things
stuff,
change.
you
And the
realize that
thing is, the
it
things
wasn't a
that you
good thing.
think.
Now, when you said when we're young, you're
When we're
referring to
younger
the
and
country,
the
you're
world is
referring to
at-
the
at a-
individuals.
The individuals in the country, and even as a young country, we are
Remember
now
now,
maturing
individuals in the country,
country.
there's always going to be young
Right,
persons,
but the
middle-aged.
point is, we're
old persons.
maturing as a country and we have an older
Yeah.
population.
Yes.
And these people that were employed by these FDIs are
Too
now
much
hitting
concession.
middle age and things are changing.
Mhm.
I mean,
And,
the
you
thing-
know, and they just discard you, take up the young people, you know. There needs to be something, you know, to.
They gotta get rid of those.
I think we need foreign direct investment.
Changing with the time.
I think the Bahamas' stance needs to change. We need them, but they need us too, they go all over the place
Right,
looking
but
for
I guess
somebody to
some of
invest
that's
their
true.
money.
There's a reason why
While
they're
they're making this money, they aren't saving
They
either.
need, even if we tax them, they'll still come.
You think it's never gonna end?
They'll still come.
So really, what it comes back to, as is the case with life, it's a matter of priorities
Yeah.
and balancing.
Gotta say.
Negotiations is always about giving up something to get something
Yeah,
else.
but it can't
We don't
be
give up
that.
anything.
No,
No,
I'm
sorry,
saying,
we give up everything.
it can't be that our only benefit is some jobs.
They don't pay their bills.
But that's all it is. That's what I'm saying, we are beyond that now, and I think it has to be more than just, okay, you come here, we give you all these
Right.
concessions, and then
Right.
you employ 1,000 people, thank you.
Fire them as you will,
No.
as you
No, no,
want
no.
to.
Rotate them as you
And
want.
when you want to,
Yeah,
carry money to give us, and then we
Yeah, I
adjust.
think it's something before we sell off our land.
Depressing.
I have a question with the exemption, like for instance, we look at Albany, right? And if we have,
And then we can
Albany
use
will
the
come under the Hotel Encouragement Act. But if you have a local who would purchase a property in Albany, would they be exempt from real property tax for that period?
One?
Well, I'm not sure how that applies if they're coming under the condominium association. Remember now, Albany's exemption is for the development of the condominiums, of the timeshare.
Okay.
So, as a foreign investor coming in, they're being allowed to come in, have access to the property, develop it, and then participate in the market in terms of selling it. Now, I would think that the majority of those persons buying the condos are probably foreign to begin with.
What if we have Bahamians or a Bahamian entity then?
Yeah. Then no.
What's
Because
your-
they're not involved in developing the property. Now, on the other hand, you could have a foreigner coming in and buying a condo as a second home. And then he becomes entitled to other incentives.
No, why? I said because, we have foreigners who own local companies, like a CAC company. You have international business companies and you have the local companies.
Right.
So if a foreigner comes and they set up a local company to own one of those properties in Albany, would they be exempted under the real property?
Not under
The Hotel
Hotels
Encouragement Act? No?
No,
Okay.
but under another incentive
Somewhere else in
provision.
Yeah, exactly.
They may benefit, because the IBC that they're holding is just a corporate structure.
That's what I'm not talking
Well,
about IBC because that'll go to.
Any corporate entity that they're using is just a corporate structure. And if that corporate structure is more than 60% non-Bahamian, then it is considered to be a foreign entity.
Oh, okay.
So
We just had that, sir.
they can then benefit from the incentives. Now, there are other incentives which they can benefit from, timeshare and other provisions under the international persons holding benefit. So these are the highlights of the Hotel Encouragement Act with respect to the incentives and tax incentives that it provides. Custom duty exemptions on building materials, equipment and furnishings. They can also receive free crown land, of course, or they can receive it at $1. I'm not a legal person, but I believe in order to transfer the title, there has to be some consideration. So they will have to pay at least $1. And interestingly, after that 10 years has expired,
You can get another
they
thing.
could possibly receive further exemption for another 10 years, providing they meet certain other requirements.
They make it more time.
So I guess it's safe to say 20 years of Atlantis, they haven't paid. Ms. Sonego? Has Atlantis paid any property tax?
Wow.
They have?
They're getting better, you know.
How long have they been there?
They've been here 20 years.
For 20 years, right?
Yeah, that's what I'm saying. They just celebrated 20 years last year.
What is the?
So, under the Hotel Encouragement Act, those are some of the
You owe, they come in here.
exemptions or tax incentives that the foreign investors are able to enjoy. Under the Industries Encouragement Act, another act, persons can receive exemption from customs duties
What would fall
on
under that?
building material, manufacturing,
So like the national, certain mattress, they would fall under that?
any foreigner who's coming in to set up a manufacturing enterprise.
So we don't believe that.
Well, not that I found out. I haven't looked to see what comes under it. But once again, building materials, and this is in order to set up a plant,
Right.
building materials, machinery, and also the raw materials that's required for the manufacturing operations. You get exemption from real property tax for 15 years. And you also get exemption from business license fees for 15 years.
The people plead it.
And that's probably translated into VAT now. Exemptions from VAT.
15 years, whatever the unions pay it. You don't have to.
That's
This
very,
next one is
very,
interesting.
very
Try
interesting.
sharing.
When you get to VAT, it's very interesting because there is a clause within the VAT Act that basically says no other legislation can give you an exemption from that.
Thanks, Madeline.
So no existing legislation can excuse you from that.
Until we change it.
Even the
Okay.
boys.
You bet.
So, and then we have the Export Manufacturing Industries Encouragement Act, where customs duty exemptions on machinery and raw materials for manufacturing entities again. And I suppose this would be more where you have an enterprise setting up a manufacturing operation with the intention of exporting around the world. Probably would apply to chemical companies around the Bahamas. You get exemption from real property tax for 25 years. I don't know what the rationale is that's used, 25 years, 15 years, different numbers, I don't know what it means.
This would probably be too, like, for government view, right, because don't they export
Yes.
a lot of their stuff?
Correct.
This is only for
How do you put
FDI.
it better
I
than
suppose
that?
a foreigner, the Bahamian would sell the exact same company in the Bahamas to export.
There are incentives for local businesses as well, and I suspect that they will probably follow the same line. But once again, these are highlighted as pieces of legislation foreign investors can benefit from.
Mm-hmm.
What are some of the others? We have the Agricultural Manufacturing Act, where it provides for exemptions from customs duties on machinery, tools, fixtures, and supplies for agricultural products. I didn't explore it with the legislation as to whether the exemption is permanent. I do not think it's permanent. Obviously, if you are setting up a plant, the construction of the plant is like a one-time thing on which you'll get exemption from building materials. The importation and the implementation of equipment, machinery, you would get exemptions on one time. Raw materials, for the most part, I would think that the raw materials, you will receive ongoing exemptions, but there would be an application that has to be made to the, I think it's the Ministry of Finance, in order to receive the duty exempt, or to be excused from paying duties on the importation of raw materials for a particular manufacturing enterprise. Same thing applies to spirits and beer manufacturing, customs duty exemptions on machinery and raw materials for manufacturing of spirits, beer, and wine. And what also comes into play with these exemptions is the maintenance of the competitive edge. In order to, if you're exporting, in order to remain competitive, then you have to be able to ensure that you're not taxed within a jurisdiction that makes you non-competitive internationally. So I'm sure there's some consideration given to that. And then we have the Free Trade Zones Act, which is essentially certain areas that have been designated as free trade zones. And if you're operating from that area, then you are entitled to certain exemptions. I know that there are a couple of them set up in New Providence, I believe in Grand Bahama as well. Free trade zones have been established in Freeport, on Grand Bahama, as well as New Providence.
Are they mainly around the ports and the airport?
And that would be considered a free trade zone. And I'm thinking this is one of the airport is also one to the east. I can't remember what it's called. Is it Old Trail Road?
Oh, that's a free trade zone. Yeah, there's manufacturing.
But that is
Oh, right.
Industrial park.
Industrial park? Oh,
Industrial,
okay.
Solely Road Industrial Park.
Oh, okay.
So you would get exemptions from real property taxes. You would have exemptions from customs duties on the importations of machinery and raw materials, etc. And apparently you're exempted from business license fees as well. That's very interesting. I should have actually confirmed that with the Control of Inland Revenue.
Okay.
Because the exemption from business license fees, I would not have thought would have been so freely given.
So what do they actually pay
Light
To-
bill.
the people of the country?
Payroll and
That's
light
what locals
bill,
do.
water and sewage.
That's what locals do.
Yeah, well, this will also apply to local.
Yeah.
Okay.
But if you're coming in as a foreigner, then you have these benefits.
Property, that's how we get our revenue, property tax and business license. Based on what we saw last week, right?
Hence why we have facts.
It's the concern about the level of revenue generated for the country.
Employment.
And
Employment, that's labor.
realistically, tax incentives for foreign direct investments is also a concern. Recall that when we ended last week, one of the concerns that was put forward for the Bahamas' taxation system was, in fact, was tax concessions, which further erodes the tax effort for the country and contribute to the narrow tax base on which taxes is being realized. So it is a legitimate concern. And comes back to how well you can balance it. Here is another incentive. Bahamas Vacation Plan and Time Sharing Act, customs duty exemptions on construction materials for vacation homes. So if you're constructing a vacation home in the country, a second home,
things so we can do.
So the ones that can afford to
Yes, your
pay taxes,
duties,
huh?
you can be exempt from paying duties on your supplies.
So you could build a
Let's do
second
that.
house,
You're
you
the
could pay
owner,
around
you're gonna
taxes.
do it.
Hello?
Well,
That's what commercial
as a
is.
second home, and this is another issue. But as a second
What a second home you
We
put.
Are
can
you
we can
gonna hear?
build it, okay? We can build it under that act,
That's what I'm saying.
and we can rent it to each other.
I don't believe it applies
To
to
Bahamian say.
residents.
I figured that.
I can't.
But as a foreigner, in order to attract the investment into the Bahamas, you can bring in your supplies duty-free. Build your second home, which presumably is your vacation home, that you will come to the Bahamas and enjoy the beautiful waters and weather. And while you are here enjoying that, you will be spending monies on consumables, as they call it, and you will engage a housekeeper, you will engage someone for them to maintain the yard and whatnot. So you do these things. Now, I can also tell you that there are a lot of foreign-owned second homes in the Family Island. And the challenge there is that it becomes an investment for the foreigner who is renting it out
Oh, yeah,
to other foreigners,
making good money.
making money,
Yeah,
and the income that they're earning is not seen like Bahamas,
yeah.
because the deals are done in New York or in Europe. The transaction is concluded outside of the country, and the person just shows up and goes and stays in the home. That is a significant issue. That's a huge issue. And a lot of persons in the Family Islands have complained about that. Because when I was doing my presentation back, it came up as to, well, how do you get them to pick up? They're outside the country. That's true. They just rented their house to a friend or someone in New York at, for $3,000 for the week. The person in New York gave them a check for it. They deposited in their New York account.
Yeah.
And you collect that way. It's true. So that is an issue that the Ministry of Finance has to address. So, lastly,
Yeah.
I think we're lastly, the Hawksville Creek
You control that
Agreement.
people.
You think so?
Now, under the Hawksville Creek Act,
You own this house?
No.
How you gonna stay in this
That's my
house?
friend's house.
Provide your invoice.
Like, no, that's my
My
friend's
friend
house.
decided to
I'm not
stay here.
paying
Who
him.
gonna give him cash?
And it's like with Bay Mr. McCuston, I'm not paying him to stay there, even though you already paid him.
that's the problem.
Yeah.
And,
Yeah, I'm not
and
paying.
one of the
I'm gonna go to
solutions
Lawrence
that I
County.
have put forward for that is to require all foreign-owned residences to be registered,
Mhm.
to maintain a register, and to secondly, require them to appoint a local registered agent who then becomes responsible to the local authorities for what happens with this resident. And that person would have to ensure that where the residence is being rented out, the revenue is being reported and the necessary taxes are being paid.
Good
In the
idea.
same way that you have companies, you have foreign companies where you have to designate a registered agent for that company, and that agent becomes responsible to the local authorities for the behavior of that company. Because it is a major complaint
Yeah.
in the Family Islands. I was in Zuma, I was in Bimini, in Lustra.
I couldn't believe.
All of those islands. And that was the one thing that kept being brought up.
Who signed that document?
Who signed that number?
You know,
All right, Hawksville Creek Agreement.
it's sad.
Under the Hawksville Creek Agreement, this is the basic incentives under it. No taxes. Okay? That's the basic exemption. No taxes. Except for national insurance contribution, which they now call a tax.
But they-
exemption from real property taxes until 2015.
That's,
Under that agreement, the various tax incentives were given timeframes. They were given timeframes for renegotiation. I believe this agreement has been renegotiated, or aspects of it has been renegotiated several times. Because it's been around since, I believe, the 50s.
But it costs us for 100 years.
And custom duty exemption until 2054, but once again, it comes up for renegotiation in 2054. Exemption for business license fees. So, as you know, with respect to the Hospital Creek Agreement and the Freeport area, the Port Authority is de facto local government. And so the Port Authority charges a license fee, or licenses the businesses in order to operate, and the businesses pay a license fee to the Port Authority, not to the Bahamas government.
So the example.
So,
You made a statement about, with that, when we get there, about no other act can prevent someone from paying that. How are they, dealing with that and this agreement?
in the VAT legislation, there's provision for the hospital.
Oh,
Okay with the.
But in the legislation, or through the VAT regime, it is causing more scrutiny to be had as to how the Hospital Creek Agreement is actually being managed. My understanding of the Hospital Creek Agreement is that these exemptions, no customs duty separate, relates to goods. You can import things free of customs duty. And we always say, customs duty is one set of taxes, VAT is a different set. In the VAT legislation, it has allowed for where there's a customs duty exemption, then there's also a VAT exemption.
really?
really?
Because tell the fellas at the airport that, they don't seem to know that.
Which airport?
The
Oh, that's
Nassau
not probably not
International.
behavior.
That's not the behaviors, what you talking about?
You could be zero customs.
Because I can be zero customs, I'm still paying
I thought it was for us.
Anyway, we'll talk about that next week, but we're talking specifically about the Hospital Creek Agreement.
And pay all the
We're
taxes.
talking specifically about the port area,
You take care of that.
All right.
right? They know what
Because I was
they're
ready to go punch somebody up.
For 7.5%?
The foreigners can.
Well,
listen here.
You can.
Okay, so these are the basic incentives under the Hospital Creek Agreement. And as indicated, there, some of them are due for expiration or for to be expired. In fact, some are expiring this year. And then in subsequent years, we do have some expiration of those incentives, and they will be renegotiated.
The country's struggling with that.
Now, this is interesting to note as well. In addition to the legislative incentives, the Bahamas Investment Authority, through the Office of the Prime Minister, can provide additional discretionary concessions in so-called heads of agreement between the government and.
This is where your pockets get leaked.
Greased.
Yes.
Okay.
So that's an important thing. So it's not just those acts that we were speaking of, but also the government can negotiate
Assuming they cover
Through
it,
heads
what
of
else could they possibly?
to give them
Giving
exemption.
away everything.
So what else they can do?
Sell your children.
The reality is that there's several things. I mean, for example, if you take the Bahama, I suspect that in the heads of agreement, they negotiated the rerouting of West Bay Street to take a public road and to change it. The public road then ran through private property. The private property was the property that Bahama had purchased from the government essentially. So you negotiate that. With the Albany, if I recall, they rerouted the road there as well. I'm not too familiar with that, but I think they actually.
Yeah.
Chop the road
Stop
off.
the road, stop, block the road.
You
You
can't,
can't continue.
you don't have to come Frank Watson. Kill yourself.
You know, I know as a kid, you know, when we drove all the way in the back there and you go looking at
Change.
change do.
No.
So when,
There's less places.
So all of these things can be negotiated.
I want you to stay in the
So
middle.
let's-
I was shocked when they said, everyone just got,
You can find.
Now, in the 2014, 2015, so we're gonna have your presentation next week now, because we didn't get
My
it to the
presentation?
assignments.
You mean
The assignment from last week.
the national insurance?
Oh.
In fact, I read the PLP, so just it.
Oh. Okay, that's bad.
Um,
And I beat you to the tax.
So, the 2014-2015 budget communication, the Prime Minister made a comment that he's pleased to report that under the terms of the superseding heads agreement recently signed with the owners of Albany, planning and work on the $150 million expansion project is proceeding expeditiously and will create an additional 1,000 construction jobs and some 300 new permanent jobs, many of which will be realized in the current budget cycle. So, things of note under the heads of agreement, because that's nothing to do with legislation. Obviously, they've had significant negotiations going on, gives and takes in their agreement. So under whatever they've negotiated, the superseding heads of agreement, there will be an additional 1,000 jobs created. Hence the reason for foreign direct investment.
Did they say,
1,000 construction jobs and 300 permanent jobs.
did they say whether those jobs will be local or Chinese? Sorry, I didn't mean to.
Well, I mean, in the case of Albany, then, you know, I think the local component is probably a lot greater. But of course, they're permitted to bring in the expertise that we
oh my God, I'm working on Bahama. A lot of
And he also commented that he stressed that the strong emphasis that the government is placing on new foreign direct investments is directly in tune with the initiatives that we are taking on the fiscal and VAT reform front, and more specifically, the introduction of value-added tax. Foreign investments will provide a much-needed boost to our economy at the same time that tax reform is being implemented. Time is not permitted, but I had wanted to go through a couple other pages in his communication where he spoke to the various foreign direct investment projects that were underway and that were coming on stream in many of the islands. There are projects in a number of the islands. But the interesting thing is that when we speak of foreign direct investments and we talk about the creation of the jobs, there is never a mention of the costs for this foreign direct investment. There is no cost that's put or attributed to the tax concessions that's being granted to the foreign investors. And therefore, we don't really know the cost of these FDIs for the sake of the additional jobs.
You know how much they should have paid?
Sorry.
You know how much they should have paid?
Right. How much tax revenue are you giving up?
Yeah.
When you allow the foreign investor to bring in these things duty-free, how much duty are you foregoing? And then you have to ask yourself, if you were to go down that road, if I had gotten that tax revenue, could I have done other things within the economy to stimulate the economy to have created jobs?
1,000 permanent jobs instead of
To create permanent jobs, but more so, to create jobs which are owned and controlled by the individuals.
breaking my heart.
So generally, the long duration of tax concessions in the Bahamas are a concern, as these incentives should only be available for initial trigger period to induce investors to come in and place the investment in the hope that initial time-limited revenue losses for the government will be followed by years of more buoyant revenue take up on the back of an expanded tax base. That is what the IMF said in their paper, which you have as part of your reading materials. So it is also important that any initial incentive period will not be renewed after the initial startup years, as this will translate into perpetual rent seeking through lobbying for incentives in lieu of focusing on cost-effective operations. Basically, what they're saying there is that if the initial startup period has already expired now, the first 10, 20, 25 years, then the tax incentives should not be continued, because that enterprise then is continuing to lobby for an advantage instead of making its operation effective or efficient, cost efficient, in order to be competitive.
I used to work for IMF.
Sorry?
I used to work for IMF. That's pretty easy. It's so clear. And the fact that doesn't happen is obviously somebody's benefiting. That's ridiculous.
Yes and no. I mean, it depends too on the extent to which we as a country review, study, and analyze the overall impact. Many times we go for low-lying fruit, the quickest and the easiest way to get a return or to get a result. But the IMF also commented that tax preferences distort investment decisions and do not rank high in the determination of the business location for international businesses. So whereas we are promoting a lot of tax incentives, their study indicate that the tax preferences do not necessarily rank high on the determining factors for international businesses. Instead, the stability, predictability, and transparency of the tax system is more relevant. So a foreign investor doesn't necessarily need to be given all of the tax breaks.
They got money.
But what the foreign investor wants to know is exactly what is the tax structure?
You just need an attractive
What do I
one.
need to include in my calculations of my return? How long it's going to take for me to have a return on my capital? I just need to have stability in your tax structure. I need to have transparency, and I need to be able to predict the effect. If I am forecasting out for the next 20 years the revenue I'm going to generate from this particular project in the Bahamas, and I'm estimating the cost, I need to also be able to project and estimate the tax consequences, and then look at my return net of taxes. I just need stability, predictability, and transparency. Now, this was a survey of firms conducted by the World Bank, in which it ranked national taxes as number 11 among the top 20 important factors in determining their location decisions where they wanted to invest. So tax measures are considered to be poor substitutes for these key determinants of investment. Those key being political stability, labor markets, operational costs, tax structure. So for business investment decisions, the most important tax considerations are not necessarily the relative tax burdens of competing economies. So the IMF went on to say, stable tax policy is an essential feature of a competitive tax system, as frequent changes create uncertainty, dissuading potential investors from investing. Also, existing investors may refrain from expanding their businesses. And it put the example of high energy costs in the Bahamas. The high energy costs in the Bahamas should be addressed directly and not through the granting of tax exemptions to compensate for uncompetitive power pricing structure. So rather than giving the foreign investors more exemptions because they say to you, the cost of doing business in the Bahamas is so much higher, your energy cost is 5 or 10 times that of Florida. The IMF is saying, well, instead of giving them incentives and tax breaks, address the cost of the high cost of producing energy.
Fix the problem.
Take the revenue that you would collect from these foreign investors and address the cost of the high cost of energy.
And you fix it for everybody, not just the foreign investors.
So in that regard, the tax preferences tend to distort the investment decision-making process. The IMF went on to say, tax incentives are bad in practice because frequently they are poorly implemented, cost ineffective, and inefficient in their design, often inviting rampant abuse and corruption. So globally, there is little evidence that tax policy in respect of incentives has any significant effect on investment. The tax structure is more important. Simple, flat, corporate income tax rate. Stable, predictable, and transparent. The IMF also pointed out 10 most common arguments against tax incentives. One being revenue loss, which is triggered by the existence of what they call deadweight loss. That is the revenue is lost, but had there not been the tax incentive, the investment might have been made in any case. So you've given up revenue when you may not have had to have given up revenue.
I think that happens.
Revenue leakage is number 2, through avoidance and evasion. Companies find a way to avoid paying the taxes that they should pay, oftentimes through negotiation. Adverse impact on tax administration. Tax administrators become incentive monitors and regulators. So the tax administrators become more so monitoring how the incentive, what kind of incentive to be given to the foreign investor instead of collecting taxes. The economic cost of fiscal adjustment, which is curtailing government expenditure through loss of tax base. That is, not collecting the additional revenue that you should collect and therefore having to curtail expenditures that you otherwise should have been making. Economic distortions, where the firms to which these incentives have been granted may become less productive, less efficient, and less competitive because they're enjoying the tax exemption and therefore are able to be competitive in the market. Had they not had the tax incentive, then they may not be able to compete in the market, which is a problem that you would have where you have foreign investors competing against local investors. The foreign investors have the tax incentives, can import without duty, whereas the local investors cannot. Another problem that exists in the family of islands with respect to vacation homes and small hotels. The foreign investor, the foreign second homeowner can construct his home free of duty on his imports. A local investor with a 5-room motel has to pay duty on the imports, or duty may not be technically correct because he may be able to apply through the Encouragement Act, but he may not enjoy all of the tax incentive or the tax breaks that the foreign investor gets. And then he's competing for occupancy of his rooms. The foreign investor is able to sell time in his property to foreigners without there being tax consequences, one of which may be that the local domestic person renting his 5-room hotel, subject to that, the foreign investor conducting his business out of the country, no VAT, so no tax. 6, generally tax expenditures impact negatively on equity and the fair tax treatment across sectors. There will be some economic sectors, business sectors for which tax incentives are provided, and some for which there is no tax incentive. And therefore, economically, the different sectors aren't able to compete evenly in generating the gross domestic product, because one is getting a handout from the government and one is not. Lack of transparency. Incentive adjudications give rise to rent-seeking behavior. Lack of transparency, the foreign investor can go in and negotiate its hands of agreement behind closed doors, and can continuously do that, lobby for continued tax incentive. There's no transparency to it. It is a matter of how well the investor is able to negotiate, how strong are his negotiation skills. Fiscally more sustainable alternatives may be available, dealing with how a country may in fact determine its fiscal options in terms of raising revenue. And that comes to an evaluation of the different methods of raising taxes. And lastly, tax incentives are mostly too costly and merely attracting footloose investments without lasting employment effect. I ran through those without going through the slides, but I have my notes. So, ordinarily, countries offer tax incentives to attract new, additional foreign direct investments by creating a competitive edge through reduced tax burden. The emphasis there is that ordinarily the tax incentives should be granted to attract new foreign direct investment and not continuously rolled over. However, oftentimes investment incentives do not generate enough incremental investment to compensate for the loss of revenues. They only may affect location decisions. So oftentimes, the cost of the tax incentives may outweigh the incremental investment opportunity to the country, to the host country. I'm cognizant of the time, and I said we were going to end early. So for the Bahamas stands out as a jurisdiction within the Caribbean that does not have income tax with respect to a company or an individual. This in itself constitute a material tax concession to foreign investors that commonly attract this tax in their respective home jurisdiction. So the fact that there's no tax on your income is already a tax incentive, particularly when you're coming from the jurisdictions of Europe, North America, where you are paying taxes. So, do we need to go overboard? The fact that we have no, or hopefully in the future, no income tax is itself an incentive. The IMF also commented that the soon-to-be established CRA, which is the Central Revenue Agency, should be solely responsible for the administration of incentives and should be empowered to withdraw tax concessions from taxpayers that transgress any of the relevant provisions or fail to meet the investment yardstick. Basically what they're saying is concentrate this negotiation of tax incentives into this body, this department that's being created to manage the revenue of the country. Give them the power to determine and to withdraw an incentive if the investor is not holding up his end of the bargain. Lastly, the sparing use of tax preferences is advisable given the risk of primary revenue loss and leakage through avoidance. I saw in the Tribune in recent times an article, well there's two articles that I looked at. One had simply said that in 2012, the Bahamas saw foreign direct investment inflows drop by more than 50% to $595 million. This was commented on by a top private sector executive, describing this as a sobering reminder of the competition for global capital. Also, recently in the papers, there was a comment made by, in an article in the Tribune on April 1st. A leading accountant, that was not me, a leading accountant agreed that foreign direct investment was not boosting the Bahamas' external reserves to the extent necessary because too much of these capital inflows leaked straight back out. Raymond Winder of Deloitte & Touche, managing partner, said FDI was only generating returns for this nation's labor market, having precious little impact on other key areas in the economy. He explained that FDI developers tended to import the bulk of their construction materials, their project managers, their lead contractors, and other key assets from overseas rather than use what was available in the Bahamas. The generous investment incentives given to developers in the form of tax breaks mean that much of these materials are imported duty-free, ensuring that the Treasury benefits little upfront, while much of the profits are repatriated from the Bahamas in form of dividends. FDI is not having the kind of impact on our foreign reserves that it ought to because of the fact that the majority of it ends up back outside the Bahamas. Mr. Winder told Tribune. So, I will end on that point with respect to FDI and its effect on taxation in the Bahamas. In summing it up, like many other jurisdictions within the Caribbean, the Bahamas aggressively goes after FDIs. FDIs are important. It does provide for the development and economic growth of a developing country like the Bahamas. The Bahamas has a lot of legislation which provides for tax incentives. The Bahamas may wish to consider consolidating that legislation into one piece, which may allow for more effective management of the various tax initiatives or tax incentives, sorry. And lastly, the Bahamas must monitor and analyze the cost of providing tax breaks for foreign direct investments to ensure that the benefits that's being derived outweighs the cost of providing. Any questions
Do you have any more on the handouts for the date, please? Can I have a
for
copy?
today?
Yeah. One that has second date.
Anyone else? These are copies of the slide. So was that a sobering discussion?
Yours may feeling.
Yeah,
Sort of fresh.
you know,
So, there were the recommendations from the IFB.
No, I didn't pull out
IMF.
the recommendations.
Okay,
But-
so, that was a recommendation from the Bahamas government, right?
Recommendation.
to the government. Yeah, let's hope they take it. I know what you're thinking.
I'm trying to think on this opposite, whether they're gonna look at those recommendations then.
Trust me, they didn't read them and then, but you know what, I'll tell you this. What is comforting is when you join the WTO, the discrimination clause that says you can't treat foreigners any different from Bahamians,
Someone have to open it.
forced them.
Does someone have a bottle opener?
Yeah, it's the one right here.
Oh.
They will be forced to, and Mr. Lady can correct me on this, but when you accede to the WTO and you have all of these discrimination clauses with respect to Bahamians and non-Bahamians in terms of concessions, you're gonna have to level the playing field.
Well, I don't know. I mean, I think the WTO is more concerned about cross-border trade. They're more concerned with ensuring that there's a level playing field between member states. That in the Bahamas, you don't add a tariff, a tax burden to another member state who wants to do business in the Bahamas or have trade with the Bahamas. I don't think that they look at the activities within the Bahamas' economy.
I know they had a provision pertaining particularly to how non-Bahamians and Bahamians are treated, so that there is, for example, they even looked at the subsidies to COP or BVTI versus any other institution that would have been operating, saying that there can't be an unequal sort of advantage. And the same was
They try to avoid the ring fencing or protectionist.
of any particular institution, and then I think it extends to national giving preference over one group of nationals versus the other. And so that's why I'm thinking that this foreign direct investment will have to be reviewed against that language, to ensure that they do not.
But generally, they don't look to say, well, you're being unfair to your own citizens. They're concerned with making sure that your economy allows member states other countries to be able to transact. So they will say, if you were to have, for example, if you were to charge a tariff on a foreigner coming in, they will say, well, maybe that's unfair.
Right.
And particularly the World Trade Organization deals with a lot of the transfer of goods. So if you're importing goods into the country, they don't want you to have an undue burden attached to importing them.
So a foreigner can bring it in duty free. I mean, that
That's
should
good
be
for the foreigners, so they have no issue.
Yeah, but of course, so the Bahamian will have to be the one to raise
That
the
the
issue with
Bahamian
them.
bring it in duty free, but the foreigner can,
Right.
then that becomes an
The
issue.
issue, so what the Bahamian needs to do that is use that same clause to say, listen, the foreigner shouldn't be able to bring it in duty free. And I can't.
And that's generally what Bahamians try to do within the country. Say to the government, you can't give preferential treatment to foreigners. As Bahamians, we can enjoy these benefits. Okay, so next week at 12:10, we will be talking more specifically on VAT. How to get away without paying back.
Wow.
Everybody's coming to class then.
We was taxing, I know we supposed to tax these FDIs doing up back rate.
That's true.
That's a good discussion point for next week. Are we taxing sufficiently in the Bahamas? Now, Mr. Pratt did not tell me whether I ought to be giving you homework.
No, we don't get one.
Well,
I don't expect you to say anything otherwise.
We have not
If you could
given
read
any
it.
homework in the
Not
past.
any homework.
I'm gonna follow the precedent set by the other teachers.
Yeah, it's a precedent that we have.
I would just read.
But you do have an exam.
Yes.
We do.
Find a way to get rid of that.
Might be useful to have little quizzes though.
Okay.
Use a quiz.
But then we'll have to find some incentives.
What would be a
Yeah,
quiz question
yeah,
from,
that's good, that's good.
what would be a quiz question from today's class? You get to give us a pop quiz right now.
Well, if I mean, a simple one would be, why does the Bahamas government provide tax incentives for foreign direct investment?
To attract foreign direct investment?
Labor.
Yeah, but why does it want to attract it?
That's what in our country.
Because it's lazy and don't want to create administration? Sorry, I was just thinking that, I should have meant to say that.
No, that's not
Yes, we'll
true.
discuss the benefits. The answer will be the benefits of foreign direct investment.
Yeah. Yeah, so what are the benefits?
That'll be
Increase
US
employment opportunities,
infrastructure,
US cash in its reserves.
currency.
currency.
So, what are some of the tax incentives that are currently offered by the Bahamas government to foreign investors?
Custom duty.
The ones you listed.
Right,
No business
the Hotel
license
Act.
Hotel Encouragement
Those different
Act,
legislations.
Spirit and Manufacturing, there's Manufacturing Act.
So, the answer may be exemption from custom duties on building supplies, importation of machinery, equipment, if you are a
Business license.
manufacturing enterprise.
Business license.
So most of you would have passed.
That was a good quiz.
Judging by the result, right?
But I do wonder sort of, people who make the decisions, I mean, mainly the politicians, have access to this sort of information. Or is there someone?
I didn't see them in the class.
Yeah, well, that's the thing.
No, I mean, yes, they.
I'm sure there are people in the government who feel, you know, that we shouldn't be focusing too much on foreign direct investment.
And that's the thing. That is advice from the IMF. That would just be a random arbitrary study of theirs, or will we ask them, listen, are we going the right path? And then
The IMF is invited in regularly
That's the thing.
to do an assessment. And the IMF comes in and does an assessment and they meet with, if you look at that paper, you would see the various departments and persons that they've met. There are numerous
Where can that be
assessments.
found, sorry? The IMF.
Sorry?
Where can that be found?
The paper was distributed.
Or the actual one? Oh, I thought you
Yeah,
meant.
this paper here, which I thought was the most relevant one, which was the tax reforms for increased buoyancy. It was only about a year old. It was conducted around summer of 2013 and released in January, I think, of 2014. But there are many international organizations that comes in and has meetings and assessments for various reasons. I served on the council of the Institute of Chartered Accountants for a number of years, and we participated with the different regulatory agencies that come in, wanting to know how well do we regulate our industries, how do we regulate professionals, so they wanted to meet with the accountants. They meet with the attorneys, they meet with the Attorney General's office. And they also come in to look at how effective are anti-money laundering policies. Whether we have a policy, whether we have one designed, and then do we actually implement it. And they write reports. And they will issue reports to the government. OECD does the same thing. They have reports that come to the government as to whether we are being compliant, whether we're living up to obligations that we've made. They list recommendations that we should implement. So these things happen often. I truly sympathize with the financial secretary for the amount of things that he must be involved with. I know that he is intimately involved with that, but all of these things, when it comes to government revenue, falls into the financial secretary. And obviously the minister responsible for finance. So they must have on their team seasoned persons and experienced persons to advise them. You know, fortunately, the financial secretary is by training in economics. And I believe that also the Minister of State for Finance is also in Congress. So it's good that we have trained persons in those positions. Because there was a time when the Minister for Finance was not a financial person.
Still is technically.
Yeah, but you have a Minister of State. So you have someone there who carries the ministry as a responsibility, but then has a Minister of State who is an economist.
When IMF issued that, I don't know, to me it seemed like more negative opinion of foreign domestic investment.
Well,
What would our reply be?
We dealt with just that section rather, a chapter dealing with tax concessions. And basically, if you go through it, there are recommendations in there with respect to what the government should do.
Are we implementing any at all?
Well, I don't know that they have. I don't know if they are planning to. I mean, one of the things was to consolidate the legislation. Another thing is, as I mentioned, the CRA, is CRA responsibility for it, which I think would be a good idea. I can only assume that with